Welcome back. I am Pratap here. We are at lesson 25 and also I am combining this lesson with HLQ analysis zones. I am not going to explain any HLQ analysis of the previous day because we have yesterday only 2 zones are identified and none of the zones got the trades in today's session. But I am going to focus more on HIT bullish and bearish trade setups. Hourly income trade, bullish and bearish trade setups, because to understand lesson 25, especially the TCO and TCZ high liquidity zones. This lesson is about trend change origin and trend change zones. To understand both these high liquidity zones, first you should understand the power of bullish and bearish trade setups. Any income trade, you can apply these concepts. The reason why I am showing you high liquidity zones is it is easy to explain these concepts based on today's live charts. So this is the reason why I have selected DIT bullish and bearish trade setups. But remember, you can apply these concepts in any of the income trades. That means you can apply on the daily income trade, you can also apply on the weekly income trade, you can also apply on the monthly income trade. This is the point all of you should remember. And also these concepts are having dependency on the earlier concepts. You all must complete our earlier concepts. Because you know that we are providing complete free training. So all the training lessons can be accessible at our NeoStock YouTube channel. So at our channel homepage, you click on the link post, or some people may see instead of post, you will be seeing community. So either you click on the post or community tab, whichever you see, then you will get access to this post. So which talks about our free supply demand zone price action training program. And this post is having a YouTube playlist link that will take you to all the earlier training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. So far we have completed 24 training lessons. And this lesson is going to be lesson number 25. And all the training lessons are placed in an order. So that's why to access the first lesson, you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So far we have completed 62 training videos. This is going to be the 63rd training video. So please complete all these lessons. Especially this lesson 25 is having dependency on lesson 23 and lesson 24. Of course, earlier concepts also. Because bullish and bearish trade setup, I clearly explained between lesson 11 and lesson 15. Zone confluence, I explained in lesson 16. And the bullish and bearish trade setup strategy, again I explained in lesson 23 in detail with clear examples. And the zone strategy I explained in lesson 24 with clear examples. And we have combined both zone confluence strategy and also bullish and bearish trade setups. So always making sure that the LTF zone is having confluence with ITF zone. I call it as a high probability trade setup. So what is zone confluence? Lower time frame zone is part of the higher time frame zone. Here ITF is our higher time frame, intermediate time frame. Let us assume. I am talking about higher time frame, general English word. For LTF, ITF and both HTF, both are higher time frame zones. If LTF is part of ITF zone, that means your LT entry zone is overlapped with your intermediate time frame zone. If intermediate time frame zone is violated, what will happen? Your trend will be changed to sideways if it is bullish or bearish trade setup related stock. your trend will be changed to sideways. When trend is changed to sideways, what will happen? We get an opportunity to identify few high liquidity zones. And those high liquidity zones are your TCO and TCZ zones. So in this lesson, you are going to learn how to identify your TCO demand zone or TCO supply zone. And also you are going to learn how to identify TCZ demand zone or TCZ supply zone. So that is the reason why you need to complete lesson 24 and lesson 23. Let us assume you completed part 1 and part 2 training lessons up to lesson 20 you completed. But without completing lesson 23 and 24, you can't get into lesson 25. This lesson is purely having dependency on clear understanding about lesson 23 and lesson 24. Not only these requirements, and one more special requirement is there to understand the lesson 25. Please refer our recent NeoStock supply demand zone premium reports. For premium subscribers, I've been providing everyday supply demand zone reports, and these reports I'm releasing to all the other members with a delay of maybe a 1 week or 2 weeks maximum. So recent lessons are available. Whatever the recent lessons are available, at least go through the most recent lesson. There you identify how I am generating different bullish and bearish trade setups in combination with the zone confluence. Please go through those because I am giving clear explanation each time when I am generating the reports. How I am applying the strategies. See, manually you can identify, but software always saves our time. Instead of studying 200 stocks and identifying 5 or 6 bullish or bearish trade setup stocks, software in just fraction of a second, it will identify those zones. Manually, if you want to identify, it will take several weeks time. By the time market will expire and you again new price actions will take place. So that's why whatever the software reports immediately next trading day, they are useful to you. Our time will be saved, our efficiency will increase, our profit margins also will improve. Obviously, what is the goal of every trader? To make more and more money. That is the goal. So that's why to achieve that goal, always we depend on help of some softwares. The softwares that work according to our requirements. Softwares will only identify the zones, NeoStock software, but it will not give you where to buy and where to sell. So whatever the concepts you learn, as per the concepts, you identify your entry, you identify your stop loss, you identify your target, you will also calculate a risk reward. So for that you need to complete the course. So this is the point you have to understand. That's why you all must complete lesson 23 and lesson 24, and the most recent at the time of attending this lesson, first you try to complete going through bullish and bearish trade setups along with zone confluence, especially ITF Zone Confluence. I am combining both bullish and bearish trade setup and ITF Zone Confluence. You must go through those videos clearly. First you should understand the setup clearly. Then it is easy for you to understand identifying these TCO and TCZ high liquidity zones. Okay, and one more thing is, in case if you did not join at our Telegram channel, I request you join at our Telegram channel. I have provided the link to our Telegram channel in this YouTube video description. Go to the video description. There you have the link. And using the link, please join in the Telegram channel. It will be helpful to you. Because many updates which I cannot provide in YouTube, I am providing at our Telegram channel. Okay, now, yesterday we identified only 2 high liquidity zones. First one is Oberoi Realty and another one is Aditya Birla. Because today is 5th September 2024. The previous trading session, end of the day, we identified. And today, none of these zones we got the trades. Look into this, we didn't get the... And here, supply zone also we didn't get. So today, I am just skipping how to fine tune these zones because our focus should be on lesson 25, how to identify TCO and TCZ zones. So for that, what I am going to do from yesterday, because as I told you in the beginning of the session, I will make use of daily income trade reports generated by the NeoStock software in yesterday at the end of the market hours. So we generated the report. This is the bullish trade setup stocks. 8 stocks are identified. In that 2 are indices. One indices is already listed in futures. The second one is not listed. So we focus on the remaining 7 stocks. This is about bullish trade setup, daily income trade. Always look into this search strategy. You will understand how we applied, and also look into the entry time frame. For hourly income trade, entry time frame is 5 minutes. And we are generated bullish trade setup. And also the demand zone confluence with 5 minutes time frame and 15 minutes time frame. 5 minutes time frame is LTF, lower time frame. 15 minutes is ITF, intermediate time frame. Both the LTF and ITF combined. That means 5 minute zone is part of the 15 minute zone. And if this 15 minute zone is violated, trend will be changed. The bullish trade setup will be changed to sideways. Now no more bullish trade setup. After that, the trend may further go up and it will change to up from uptrend, it will change to sideways, and then it may change to downtrend. But there are times, once again sideways will change to uptrend. That possibility is also there. But many times from uptrend it will go to sideways. From sideways again it will go to downtrend. Sometimes from sideways again uptrend will continue. Sometimes. But many times the trend will be sideways to downtrend, it will continue. Uptrend, sideways, downtrend. Majority of the times. Exactly the same way, these are the bearish trade setup stocks for hourly income trade. That is, entry time frame is 5 minutes. Entry time frame 5 minutes. And also look into the search strategy. So this is a bearish trade setup. And also here also we have some supply zone confluence. Earlier we have demand zone confluence. Now we are seeing supply zone confluence. 5 minute supply zone with 15 minute supply zone. That means 5 minute zone is a part of the 15 minute zone. If this 15 minute zone is violated, trend will be changed. First of all, bullish and bearish trade setups these are the core strategies as part of the supply demand zone price action. They are very powerful strategies. How powerful they are, let me show you in today's live market trades. Because these are the trades we identified yesterday at the market hours. And all these trades I kept in HIT, watch list. This is the HIT watch list, and all these are all the trades what we identified from this list. Only Nifty metal is not included because that is not listed in F&O, but remaining all are there in the list. Here we have 8 stocks and here we have 7 stocks. All the complete list is here. Let me quickly go through. I am not going to explain any details, but our focus is on how powerful these zones are. If any trades are executed, how much profits, how much time they have taken, how much profits they have given, you need to understand. See, the first one is Nifty mid cap select. It is part of the zone. Let me change the time frame to 5 minutes. So this is the demand zone identified by our software. Whatever I shown you here, those zones, directly I marked them by taking the leg in and leg out timestamps. This is leg in and leg out timestamp and base candle count. I have drawn the zone. Here you have a ERC candle, 2 base candles. ERC candle as a leg in, 2 base candles and a rally candle. This is what our software identified. Because our software is having intelligence to identify failed ERC candles as a leg in. Okay, anyway, this is the zone currently supporting bullish trade setup. And this zone is a part of the 15-minute zone because all these filters, you look into this. The software filtered based on the zone confluence, 15 minutes and 5 minute zone. This zone confluence is required. Then only we can identify these trade setups, TCO and TCZ high liquidity zones. Otherwise you can't. When you will identify, I will explain once we get into those scenarios. Because I'm going to explain each and every stock, any trades are there, how powerful these trades are, bullish and bearish trade setups. If they are violated, still how powerful they are. That is also I'm going to explain. Even after violation also we get trade opportunities. This is what you should understand. How we will get trade opportunities? Based on the high liquidity zones, the TCO, trend change origin, and the trend change zone. What is a trend change origin, trend change zone? You will understand when any of these zones are violated in today's live market. Okay, anyway, we didn't get a trade, so we can leave this. Next one is Asian Paints. Asian Paints is also having a demand zone. This is a 5 minutes demand zone, and this 5 minutes demand zone is having confluence with 15 minutes demand zone. That is what our software identified here, 15 minutes and 5 minutes. This also we didn't get a trade. Next one is Burger Paints. Burger Paints is also a hourly income trade, bullish trade setup, the 5 minutes entry zone, which is inside the 15 minute zone. And here also we did not get the trade. The next one is the CUB, City Union Bank. This is also having a 5 minutes bullish trade setup stock, which is part of the 15 minute zone. Today also we didn't get a trade opportunity. The next one is Deepak Nitrate. This is also having a 5 minute zone. See here, rally, base, rally, 5 minute zone. This 5 minute zone is part of the 15 minute zone. We have a drop, 4 base candles and a rally candle. And this 5 minute zone is, we got an entry today at 9:25 minutes candle. After that, how sharply 5 minutes, next 10 minutes, 15 minutes and 20 minutes, trade is finished. And it reached the target. The 5 minutes target, rally, base, drop is the 5 minutes target. You got the entry and reached the target. And it has given a very good profit today. Deepak Nitrate. Over 9,000, I didn't remember exactly, I think it is 9,800 rupees. I already posted in our Telegram group. And which is 7.5% ROI we got in this trade. And next one is GNFC. This is also a bullish trade setup, a 5 minute zone. This is the rally base rally, which is part of the 15 minute zone. And today we didn't get a trade opportunity. Only one bullish trade setup we got the trade opportunity, and that has given 7.5% ROI as per one future margin cost. But supply zones has given multiple trade opportunities. And while looking into the supply zones, you will be learning these up. Because couple of supply zones are stopped out. That means the 15 minute zones also violated. At the time we got new trade opportunities as per the concept TCO and TCZ. And when I am explaining how we got the trade opportunity, you will be learning about these high liquidity zones. Okay, this is the last bullish trade setup for hourly income trade. And in this zone, we didn't get a trade opportunity today. Previously already after the zone creation, that is yesterday. See here. The zone was created, and after that how it picked up the orders, and see how it moved the price. Okay. Now we look into the supply zones. That means bearish trade setup for hourly income trade. First one is Adani Ports. We didn't get a trade today. So this is a 5 minute zone. We have dropped 2 base candles and drop. And this is part of the 15 minute zone. We didn't get a trade. So let's don't focus on this. Next one is BHEL. See BHEL. We have a rally, 1, 2, 3 base candles and a 4 base candles and a drop candle. rally based drop, which is part of the 15-minute zone. See here the prices came, and today's candle, morning 9:15 candle, prices went, 9:15 5 minutes candle, prices went, picked up the orders, and see how sharply it came down. So within 1.5 hours, it reached the bottom. Based on 1 minute trailing stop loss, it gave you the profit. Yesterday HLQ analysis also I explained about trailing stop loss. See here, we have a separate session, lesson 19.3. I explained about the trailing stop loss. So the 1 minute, because this is the intraday, 1 minute trailing stop loss we are using. See, none of the 1 minute zones are violated. Here we have a drop, base and drop. 4 base candles and drop, follow through candle. This zone never violated. And next one, rally, base, drop. This zone is picked up the orders, but it is not violated, came down. Again, drop, base, drop. And this area is tested multiple times, couple of times. Picked up the orders, again picked up the orders from this drop, base, drop, came down. And again it was trying to pick up the orders from this zone just before, again it came down. We have a rally, base, drop. We have a rally, but this is not a base candle. Here you can say drop, 1, 2, 3, 4, 5 base candles and a drop candle. See, this is a clear drop, 3 base candles and a drop. Again drop, base, drop. Again drop, base, but this is not a valid leg out. Here you have a rally, base, drop again. Rally, base, drop, came down. So each time you are adjusting, you will be adjusting your trailing stop loss. Each time a new supply zone is created, you will draw the zone. When the next supply zone is created, you draw the new supply zone, you can delete the previous one. See, this is the most recently created, let us assume. Forget about this price action. Now we have a rally base drop. We have drawn the supply zone. If prices are further going down and a new supply zone is created, we will delete this and we will draw a new one. But now what happened? Prices came down and here it started moving up and violated this zone. And here our stop loss is triggered and immediately we will exit from our trade. That means we will book the profit here. So trailing stop loss, each time we are adjusting, we are trailing the price value. We are moving it down, 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 down until the first 1 minute zone is violated. There we are exit from our trade. That means we are booking our profit here. Here we took the entry and here we booked the profit and the entire trade is completed in 1.5 hours. And this is the way BHL is given profit over 20,000. It has given over 10% ROI it has given. Why I am telling you need to understand the power of the bullish and bearish trade setups. How they are working, you need to understand. How powerful they are, you need to understand. Because many of you people many people who are learning supply demand zone, many of you, I am sure many of you doesn't understand the power of these concepts yet. You are yet to understand. Okay, some of you learned concepts some 6-7 months back and started practicing and also started taking trades. By this time they already realized. That's why some of you people are already using our premium service videos, because already you got good exposure. But those who are currently learning the concepts, your focus should be on the concepts. Your focus is not on the trades. You can do paper trading, but you cannot do real trading until you complete your course and practice some of these concepts. How to practice, I already explained in detail. All the steps I specified in the premium video. I think this will be there before this training lesson. Between lesson 24 and this is going to be lesson 25. Between these two lessons, a premium video I kept in the playlist. Later on I may remove that video. But time being I kept. The reason is many of you people who are learning, you are not following your training methodology properly. When to practice, how much time you should practice, and how much time you spend in the paper trading, everything I explained. If you follow like that, you will become a very good trader. You will earn a lot of money in the coming days. See, today we followed whatever the concepts you learned in lesson 19.3, trailing stop loss. We followed the same concept and we got around 20,000 rupees profit. We would have got this profit, which is over 10% ROI in just 1.5 hours during the intraday. And which concept it is? Bullish and bearish trade setups. These are the part of our core supply demand zone price action concepts. These are the core concepts. But only thing is, software is helping us, saving our time in identifying these zones. If you want to identify exactly this BHL trade, maybe you would have analyzed so many stocks. Luckily, if you analyze this stock, you would have identified. When you are having 200 stocks, randomly you pick up some of your favorite stocks. In your favorite stock, every day you won't get the trade. Maybe you get the trade after 1 month. But this 1 month, what you do? Do you sit ideal? That is the area our software is helping to save our time. That's why always the technology we should use when you want to make more and more money. Those who are using technology effectively, they are the people who will be earning more and more money. Manually, you have to depend at the time of learning the concepts. Please remember, once you get into the professional trading, you should depend on the technology. You should use different tools that will save your time. Okay, BHL is one. Next one is Navin Fluorine. Have you noticed Navin Fluorine is a 5-minute zone? Let me go to the 5 minutes time frame. We have a 5-minute zone Navin Fluorine. We have a drop, base, drop, and this zone is violated after that. And our stop loss would have been hit. But whatever the loss you get is a minimal loss, because the risk is very minimal. See, the beauty of supply demand zone, when you get the profit, you get huge profit. When you get the loss, very minimal loss you get. But even you got the loss, still you will get the profit. How you will get the profit? That we are going to learn. I am going to teach you those concepts now. First, I have to show you the 15-minute zone. Sorry, Navin Fluorine I am not going to explain. The reason is, sorry for my mistake, not Navin Fluorine. There is another example. Navin Fluorine is an invalid trade. This is another important point I want to teach you. The reason why it is invalid trade, this is the 15-minute zone, what our software has suggested. We have a drop, 2 base candles, 3 base candles, 4th one is a medium size leg candle, and then we have a leg candle. This is also looking like medium. The reason is why there is a special concept called leg out, maybe a little smaller than the large candle. Still you can consider when the candle is completely moving out of the zone. There are some special rules and conditions. I will explain these kind of exceptional scenarios once our experience grows. Because once in a while you see such kind of scenarios. I don't want to make you people get confusion by teaching so many at once. Step by step you are learning. See, today you are learning the first set of high liquidity zones, because we got good examples. By this time you practiced about these bullish and bearish trade setups along with zone confluence. That's why now you will easily understand. That's why I'm always telling you people, those who completed the concepts, you have to practice, you have to start trading to understand the most advanced concepts. So this is the 15-minute zone. See, this 15-minute zone is violated. This 15 minutes is violated, then there is no meaning looking for a zone confluence. Because in our software, I didn't filter for 15-minute zone violation. I only filtered for entry time frame zone violation. If I would have added this filter for 15 minutes, these zones would not have been resulted. So that's why whenever zone violation is there, whenever zone confluence is there, you have to drop both LTF zone and also ITF zone. Then only you will identify if ITF zone is violated, you will not consider this as a high probability trade setup. You will ignore this stock. See, today we saved our trade because we didn't take a trade. because it is already 15-minute zone is violated. And the violated 15-minute zone trend is already changed. So that's why TCO and TCZ zone algorithms means concepts. Those concepts you cannot apply here. The zone should be violated in the recent. That means in the live market today's trading session, that zone should be violated. Then you can identify. If it is violated already previously, in that area you are having a zone confluence, then this is an invalid trade based on the zone confluence. You may take the trade individually without 15-minute zone confluence. As a low probability trade setup, you can take the trade. So that's why Navin Florin is invalid. Hope you understood this concept clearly. If ITF zone is violated, and if your LTF zone is a part of the ITF which is violated, you cannot treat the ITF trade, bullish or bearish trade setup trade, as a high probability trade. That should be a normal trade setup, bullish or bearish trade setup. Why we are looking for zone confluence? To increase the probability of that particular trade success. Success rate will increase if probability will increase. When probability will increase, if LTF and ITF are overlapped with each other, in that scenario, the zone might be having higher chances to get success. Okay, fine. So Navin Florin is an invalid. This is a reason why ITF zone, that is 15-minute zone, is violated for this DIT bearish trade setup. Next one is Page Industries. Page Industries, in this stock you will be learning the concept TCZ, trend change zone, high liquidity zone concept you will be learning. I will come back to this concept a little later. First, let me explain about this. Here we have a 5-minute zone. Let me go to the 5 minutes time frame. This is the drop candle. We have 1, 2, 3, 4, 5 base candles and then a drop candle with a gap. And this medium size candle is included as part of the base. The reason is this is not having 75% body. This is between 50% to 75. If between 50% to 75, it might be considered as a lagging candle, either lagging candle or base candle, depending on the situation. Because already a lagging candle is there, this is considered as part of the base. That's why software worked quite intelligently. That's why this is a zone identified clearly. And then we have a drop candle. After that, from this zone, the orders are picked up and again get into this zone. Again moved up, get into this zone. Again moved up, get into this zone. And here, this zone is, look into this zone. Already having 1:3 RR. We make sure that 1:3 RR. So prices, today prices, this is not today's, this is today. Prices entered into this zone. After that, after we took the trade, see here 5-minute zone is slightly pierced. Once the zone is pierced, it is invalid. But already we took the trade. Because we are within the stop buffer saved our trade. After that, prices came, reached this target, and we got the profit. After that, once again prices entered. If anybody would have taken a trade, still it gave the profit, but we cannot take such. It is a lucky trade. If anybody would have taken, it is a lucky trade. Why I am saying we cannot take a trade? Already this 5 minutes fine-tuned 5-minute zone is, this is not the fine-tuned 5-minute zone. This is the bearish trade setup 5-minute zone. This bearish trade setup 5-minute zone, which is having zone confluence with 15 minutes, that 5-minute zone is already pierced. But earlier we took the trade, even though zone is pierced, it is within our stop buffer, our trade is saved and we got the profit. Next time pierced zone, you cannot take the trade. You cannot say, this is my second trade. If you took a second trade, you are lucky. See here, if you would have taken a third trade, see what happened after that? The zone is violated completely. Your stop loss would have, see the price went beyond the stop loss. Your trade would have been stopped out. So that's why in page industry, only the first trade is valid. This is the one valid. You may ask a question, already this zone is tested. Why we are taking the trade? Look into this page industry, what kind of zone it is? It is a high liquidity zone. Earlier already 2 times it is tested, 2 times rejections also there. Still today we took the third trade because it is a high liquidity zone. High liquidity zone already supports multiple. So today we got the third trade, but it is pierced after we took the trade. But that even though it is pierced, still we got the profit because we are within the stop buffer. If the stop buffer we crossed, at the time we would have exited. In this candle we would have exited if you take a trade in this candle. If you take a trade in this candle, it would have been a lucky trade for you today. But every time you won't get lucky trades. That's why the rule always remember, once a zone is, entry zone is pierced, next time prices reaches, don't take the trade. Okay, by seeing you may feel, okay, I would have taken a trade, I would have got the profit. But it won't be happening every time. Maybe why it is worked, there is other reason. Here a new zone is the live market, rally, base, drop is created. That's why your trade is worked. Maybe we can take a trade like this, rally, base, drop. For that you would have taken a trade. Because still it is part of the 15-minute zone. 15-minute zone is not violated. Because it is not violated, still bullish trade setup is valid. So that way you can take the trade. But not this high liquidity zone. High liquidity zone is gone. The 5 minutes high liquidity supply zone, what our software reported here. Page industry 5 minutes zone is a high liquidity supply zone. Once the zone is pierced or completely violated, whatever situation, that's it. It is no more a high liquidity zone. It is a pierced zone. But bearish trade setup still supporting because a new 5-minute zone is created. Because the trend will be based on the ITF zone. In this example, ITF is 15-minute zone. 15 minutes trend is not violated. That's why still 15 minutes trend is uptrend only by the time prices reaches here. So that's why once you learn the concepts manually, that way you would have, let me delete. See, once this is pierced, next time you would have drawn a zone like this. Rally, base, rally. See, now again you got a trade with small entry buffer. You would have got 1:3 RR you would have got. So you would have got another successful trade. This is a new 5-minute zone. Why you have selected new 5-minute zone? Because you already learned bullish and bearish trade setups. In the live market you would have identified, still this is a, because 15-minute zone is not violated, still trend is uptrend. In uptrend you can take a trade in the 5-minute zone, lower time frame zone you can take. So that's why this is another successful trade for you. But not based on the previous zone. Based on a fresh zone. See this zone, next time see what happened. Zone is pierced and finally the entire 15-minute zone is also violated. And now trend is changed to sideways. And this is the target zone, 5 minutes target zone. This is already violated. Sometimes the violated 5-minute zones you can use for target if risk is, if RR is available. If RR is not available, below there is one more 5-minute zone. Until then you can place your target. That is possible. Okay, next one is Siemens. Siemens is having a 5-minute zone which is inside 15-minute zone. This zone is already tested earlier. 3rd September zone is tested. Prices went deep inside also. So you can't plan any trade. Such kind of zones you have to reject. If it is high liquidity, you can, but this is not high liquidity. Let us look into the same one. If it is high liquidity, you can take. Oh, I'm sorry, Siemens is a high liquidity zone. So there is nothing wrong in trying again another trade because it is high liquidity. Next one is Tata Communication. In Tata Communication, you have a 5-minute supply zone. This 5-minute supply zone, we have a rally, 3 base candles and a drop candle. Or this also you can consider a rally, 1, 2, 3 base candles and a drop candle. Sorry, 1, 2, 3, 4. 4 base candles and a drop candle. This is yesterday this zone was created. But today, see, morning session, what happened? This zone is completely violated. And this is the target zone. A 15 minutes high liquidity zone. This is a 15 minutes high liquidity zone. Let me show you. Tata Communication, see here. This is a bearish trade setup supply zone. This is a normal high liquidity zone. Already tested 8 times. Today also it is tested. Today also it gave trade opportunities. See, yesterday price was closed, but today morning directly with a gap up it opened. And this zone is violated. With a gap up, the violated, and then again prices came down. But already zone is violated. Which zone is violated? 5-minute zone is violated and also 15-minute zone is also violated. Because both these zones are violated, now you will be learning a new concept. From both Navin Fluorine and Tata Communication, both these, I mean what I mean to say, from both these violated zones, you are going to learn the concept. Before that, let me finish TCS also. TCS is also having a 5-minute supply zone. See here, with a gap down. And today we didn't get the trade. You may ask, where is that 15-minute zone? Exactly the same zone is also 15-minute zone. Let me go to 15 minutes time frame. See here, drop, base, drop. So the same thing, 15 as well as 5 minutes. Okay. So we didn't get a trade. Now you have to understand the power of bullish and bearish trade setups. They are very powerful. They work very well. Especially bullish and bearish trade setups, they are overlapped with ITF time frame. If for 5 minutes, ITF is 15-minute zone. If 15 minutes is your entry time frame and its ITF is a 75 minutes time frame. That means 15-minute zone is part of 75-minute zone. That is for DIT trades. For weekly income trades, 75 is your entry time frame. So ITF is daily. That means 75-minute zone should be part of the daily zone. Exactly the same way, monthly income trade, your entry time frame is daily. And that daily zone should be part of the ITF zone. That means weekly zone. Daily and weekly. That is what zone confluence. What is the meaning of zone confluence? The entry time frame zone should be part of the higher time frame zone. The higher time frame can be either ITF zone or it can be HTF zone. Okay, at present for HTF confluence is not required for this strategy. This strategy is having dependency on LTF and ITF confluence. Lower time frame zone and intermediate time frame zone confluence should be there. And the trade setup should be either bullish trade setup or bearish trade setup. Bullish trade setup, it is a demand zone confluence with ITF time frame. For bearish trade setup, it is a supply zone confluence. with ITF time frame. You see here, look into Navin Florine. This is the one violated, right? See, this zone is having confluence. Not Navin Florine, sorry, there is a Navin Florine is invalid trade. Where is the other one? Did I miss any stock here? Adani Port, BHEL, Navin Florine. Adani, BHEL, Navin Florine. After that, Page Industries, Siemens. Page Industries, Siemens. Next, Tata Communication, TCS, VEDL. VEDL I missed. Actually, we are going to learn based on VEDL and Tata Communication. Sorry for my mistake. VEDL, I forgot to add into the watch list. Vedanta. So that's why I'm wondering, one stock is missing. Navin Florine is invalid zone. Nothing is there to learn. The only learning is, if the ITF zone is pierced, you cannot use in the zone confluence for higher trade setup, high probability setup. So VEDL. Look into this. VEDL is also violated. You have a 5-minute zone which is part of the... Let me delete this for time being. Later on I will explain. See, this is the 5-minute zone which is part of 15-minute zone. Let me look into the 15. See here, we have a ERC candle as a drop candle, base, and again a drop with a hidden body. This is with the hidden body, you get a body. A drop you will get. ERC candle. So drop, base, drop. It looks like rally, but it's not rally because you need to add the hidden body. The moment you add the hidden body, it will be changed as a drop candle. Drop, base, drop. These concepts I explained in lesson 9.3 and 9.4. If you did not listen hidden body and hidden zone concepts, please go through lesson 9.3 and 9.4. That is the practical sessions of phase 1 training program. Okay, so now we are going to use VEDL and Tata Communication to teach you the concepts TCO and TCZ. What is the TCO and TCZ? These are the high liquidity zones. But among high liquidity, I divide into two categories. High liquidity zones are high probability setups, no doubt in that. Even though they are high probability, again I classified into high priority and low priority. Among the high liquidity, high priority and low priority. But please remember, both are high probability trade setups. Within the high probability, one is having even more score, another one is having less score. So that's why I named it as a high priority, high liquidity zones and low priority, high liquidity zones. So among these high liquidity zones, we are going to learn about TCO and TCZ concepts. What is a TCO and TCZ? I already explained these concepts in lesson 21. The same slides only I am showing you. I am not going in detail. If you did not remember, please go through lesson 21.2. In lesson 21.2, you can find these slides. Just for reference, I am giving you. I already explained. Their names are trend change horizon. TCO means trend change horizon. Today you will understand what exactly the meaning of trend change horizon. And also you should remember, these algorithms were built based on counter trend trade setup. And this counter trend trade setup you will learn based on the Dow theory concepts or Dow theory principles. I am going to explain Dow theory based on demand and supply zones. Today, I'll just give you overview. It's a very small concept, easily you can understand. General Dow theory, they are explained based on swing highs and swing lows. Do you remember swing highs and swing lows? I explained in the trend. Swing based trend calculation. Higher high, higher low, lower high, lower low. So Dow theory concept is based on that higher high, higher lows, lower high and lower lows. Now the same, instead of higher high, higher lows, the demand zones, supply zones. That is what we are going to use because we are supply demand traders. It can also be used for confirmation technique, but this confirmation technique I will explain later. But first we will focus how we can capture these trades. Similarly, TCZ means trend change zone. See here, earlier trend change horizon. This is a trend change zone. What is the difference between this horizon and zone? You will understand because both the scenarios are occurred in today's live market. That's why we have two stocks. Okay. So now, first I will explain trend change horizon concept because VEDL is suitable for trend change horizon concept. VEL is violated. It is a bearish trade setup for hourly income trade, and this 5-minute zone is also having confluence with ITF. If this ITF zone is violated, what is the meaning? Trend is changed. If ITF zone is violated, trend is changed. See, now we are in the 15 minutes chart, drop based drop. The 15-minute zone is changed. That means DIT trend is changed. Currently the stock is supporting a bearish trade setup for hourly income trade. And also the 5-minute zone is having confluence with 15-minute zone. What is the meaning of confluence? The 5-minute zone is part of the 15-minute zone. If 15 minutes trend is changed, now no more bearish trade setup for hourly income trade is supported in VEDL because VEDL's trend is changed to sideways. From sideways, next market will be changed to uptrend many times. But sometimes from sideways again downtrend will continue. Sometimes. But majority of the times downtrend to sideways, sideways to uptrend. This is how market will react. In rare scenarios, from downtrend to sideways, again sideways to downtrend also it will continue. I already explained these concepts in the trend calculations in phase 1 training program. I gave a detailed explanation. We have 3 or 4 lessons are there for trend calculation. If you missed any of the videos, please listen carefully because high liquidity zones are based on the trends. If you don't learn trend concepts properly, then whatever the high liquidity zones I am explaining, you don't understand properly. Future very good trade opportunities you will be missing. Today everybody is looking like those whoever is taken trade in VEDL, you will be thinking like today my trade is stopped out. Am I right or wrong? You will be thinking my trade is stopped out, I got the loss. But actually today you got a very good trade opportunity after the zone is violated. Because you didn't learn the concept, you will be leaving this trade because it is violated. But if you would have learned this concept earlier, today after the violation, immediately you look for trade opportunity, new trade opportunity. What is a new trade opportunity? The new trade opportunity based on the high liquidity zone trend change horizon. So what will happen? So let us go to the 5 minutes time frame first. See here what happened. In this candle, this entire 15-minute zone is violated. And this candle, when this candle is there at 9 o'clock 35 minutes. At 9 o'clock 35 minutes, which time frame it is? 5 minutes. 9 o'clock 35 minutes, 5 minutes candle confirmed the trend is changed to sideways. And there is a most likely it is going to further move up. That is what happened today. Rarely what happened? Again from sideways, once again prices will go down and again downtrend will continue. Rarely it will happen. But majority of the scenarios, trend will continue. Because the trend changes will take, first any trend changes, if you observe, first they start from a 5 minutes time frame. 5 minutes trend is changed to, from downtrend it will change it to sideways. From sideways it will change to uptrend. After that 15 minutes trend will be changed to downtrend to sideways. And then again 15 minutes trend will change to uptrend. After that 75 minutes trend will be changed from downtrend to sideways. After that uptrend. This is the way trend changes will take place in general. If the overall market is down in all the time frames, first always the trend changes starts from the lower time frame. Because we are referring always the lower time frame as 5 minutes. Still you can use 1 minute, but 1 minute scalpers will be using. But intraday traders mostly you will be using 5 minutes time frame. So that's why 5 minutes trend currently downtrend is changed to not 5 minutes trend, 15 minutes trend. 5 minutes is entry time frame. For entry time frame in bearish trade setup, ITF time frame is the trend calculation. ITF is 5 minutes. That's why always we are looking for 5 minute zone confluence with 15 minute zone. You may ask a question, what is the speciality? Some people will not trade on the bullish or bearish trade setup in zone confluence. That is a lower time frame zone confluence with intermediate time frame. They don't take the trade. Some people, they only look for zone violation, the ITF zone violation. Once the ITF zone is violated, then they look for whatever the concepts I am going to teach. They will look for such kind of trades. Only in those trades only they will participate. Because that is what, as per the Dow theory. What Dow theory is saying, when trend is changing, at the time when you participate in the market, you may get a higher profits. Because during the trend changes you are entered, in the initial stage you entered. Generally what happened, from downtrend it will move to sideways. So at the time you are entering. But there is a danger also there. Because I told you sometimes sideways trend again will continue with the downtrend. At the time your stop loss will hit. You will accept, because such kind of things will happen every time. Rarely it will happen. But many times what will happen, from downtrend it will change to sideways. From sideways it will change to uptrend. From uptrend again it will continue with uptrend. From uptrend again it will continue with the uptrend. Like that it will continue. After it reaches some point, probably again that uptrend will be changed to sideways. At the time only they exit from their trade. See, that means in the initial stage they entered into the market and they will hold the positions till the trend is reversed. At the time only they exit and they book the profit. This is how some people will do their trading strategy. But they get loss only when downtrend is changed to sideways. From sideways again trend is continued to downtrend. At the time their stop loss will hit, because they would have taken the long trade. But now again sideways it come down to downtrend. Their long trades would have been stopped out. They are okay with that strategy. Those people who are trading, because when they get the profit, they get a huge profits. Purely based on the trend changes, they are taking the trades. This is what Dow theory has suggested when trend is changed. Dow theory is also suggested. Maybe sideways to uptrend, when it changes, you can take the trade. But the problem is when sideways to uptrend, when it changes, price retracement may not happen every time. That means you will be missing the opportunities. Without giving a trade, market will be flying just like that. You keep on waiting and you won't get the trades. But when market changes from downtrend to sideways, it will give you opportunities, immediate opportunity. But the danger is, if instead of market continues towards the upside, if it reverses again, your trades will be stopped out. That way you will get the losses. Always remember, the danger is there. Because we have the software, whichever the opportunity it will give, we will have to take. Now you are learning this concept. This opportunity also you are going to. Okay, what we are going to learn? The point I am going to tell you, when market changed from downtrend to sideways. See here, by breaking this 15 minute supply zone, now trend is changed to sideways. When trend is changed to sideways, again it will retrace us back to a lower time frame demand zone or ITF demand zone. See here, is a lower time frame zone is created here? Yes. We have a rally, base rally. If you take this, consider this as a rally, or otherwise a failed ERC candle, or not failed ERC, sorry, you have a gap is there. See, at the hidden body, the moment you add the hidden body, it is a rally candle. You have 3 base candles, rally candle. That way also you can draw. It doesn't make any difference. The reason is the leg out is having lower wick. Whether you consider all the 3 or you consider this as a leg in, there won't be any difference at all. Because everything is part of this zone only. I am drawing a demand zone now. This is a newly created demand zone. You have to ask a question. Why I am drawing this zone? Everybody should get this question. Excuse me. Why I am drawing this zone? This zone is a powerful zone. Why it is powerful zone? Because this zone is responsible for the violation of this entire zone. Okay, what is if it is responsible, it gets the zone violation. Zone achievement it will get. Violated opposing zone. You may ask, what is the speciality? Because every zone that violates the opposing zone, it will get the zone achievement. Then why it is high liquidity? That is a normal zone only. But why can you treat this as a high liquidity? The reason is, this is not only it get the zone achievement, but this zone is also responsible for changing the downtrend to sideways. Till then, market was moving down, 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 and downtrend is getting continued. And this zone is responsible for the changing the trend. It already got the zone achievement, but it is also responsible for changing the trend. That is the reason why it got the importance. But here 2 points you have to observe. Generally, which time frame you are looking, which time frame you will be looking for trend changes, intermediate time frame. So in the intermediate time frame, you need to look for the zone. That means you need to look for a 15-minute zone in the intermediate time frame. That 15-minute zone is the most important zone for the trend changes. You got the point? But which time frame we are? 5 minutes time frame, entry time frame. Why I have drawn this zone? You may ask another question again. So I have to go to the intermediate time frame and I have to look for the zone. Why I have drawn in the 5-minute zone? Before I answer this question, first I will show you what happened in the intermediate time frame. After that, my explanation you will understand easily. So I am changing the time frame to intermediate time frame. Entry time frame is 5 minutes in hourly income trade. So I am changing to intermediate time frame, that is a 15 minutes time frame. Is there any intermediate zone is created? Yes. We have a ERC candle, failed ERC candle as a leg in. You can consider this like a drop candle. You have 3 base candles in the 15 minutes time frame and then a rally candle. And let me draw the zone. Let me give a light color for 15 minutes time frame. Sorry, I have to give demand zone color. This is the thick color is 5 minute zone. This is the light color is a 15 minute zone. Let me go to the 5 minutes. You will get clarity. See here. First it picked up the orders. Do you remember? You land a strategy. Lower time frame zone is the horizon for the higher time frame zone. That means this zone is responsible for the creation of the new 15-minute zone. All these are all 15 minutes base candle. After that, in these candles, 15 minutes leg out is created. That means 15-minute zone is not created by the time when this 5-minute zone is available. First 5-minute zone was already created, which was the responsible for the creation of, for the violation of this entire zone. Here there is no 15-minute zone. Go to the 15 minutes time frame. See here. This entire thing is a rally candle, had the hidden body, a rally candle, and another rally candle, follow through candle. The zone is violated. So 15-minute zone, this 15-minute zone acting as an horizon, and then created the 15-minute zone, and this 15-minute zone is again responsible for entire this activity. Because why it is responsible 15-minute zone? And because this 5 minutes horizon helped this zone. So this is the way the 5-minute zone as an horizon to the higher time frame zones will be created. Lesson 21, whatever the doubts you might be, not lesson 21, lesson 22. Lesson 22 you land lower time frame zone as an horizon to the higher time frame zone. See, now practically you have seen. First 5-minute zone is created. This 5-minute zone is why they created institutions, because they know that there is a 15-minute zone is available, which is responsible for bearish trade setup. Institutions know that the strong order flows will be there because they are following the trend. Now institutions wants to change the trend. When they wants to change the trend, they want to keep a normal order flow or they wants to keep a heavy order flow. So they want to keep a heavy order flow. So which time frame they kept? In 15 minutes time frame or 5 minutes? Generally they create a 15-minute zone and they break the zone, or they may create a 5-minute zone and break the 15-minute zone. If that is the case, the lesson 22, whatever you learn, that concept will be developed. Lower time frame zone as an horizon to the higher time frame zone. See, remember, just now you observe how I developed these concepts. Now you get clarity. I have identified all these powerful concepts that you are learning today. And these powerful concepts you can identify in the early stage by using the high liquidity zones, TCO and TCZ concepts. How you will identify? First you need to wait for, is there any lower time frame zone having confluence with higher time frame zone is available or not. You have to observe. If it is available, next you need to wait for that zone violation. See, this zone is violated. The moment it is violated, now you need to observe who violated this zone. Is it lower time frame violated or is it ITF time frame is violated? So in this example, ITF zone is violated. Sorry, ITF zone is responsible. ITF zone is violated, but responsible is lower time frame. Okay, now immediately one point you have to understand. Mostly institutions wants to further push the market up because they want to change the trend to uptrend from sideways after that. If that is the case, they will create a new higher time frame zone. If they want to create a new higher time frame zone, by picking the orders from this lower time frame zone, they will start creating a higher time frame zone. Now you will get the first opportunity. This opportunity will give you to participate in the leg out formation of the higher time frame. See, it picked up the orders and then a 15 minutes leg out is created. When higher time frame zone is created, higher time frame leg out should be formed. When higher time frame leg out is getting formed, higher time frame means in this example intermediate time frame. When this intermediate time frame leg out is formed from the lower time frame, you get a huge profit. Because 15 minutes leg out should always be larger than the 5 minutes leg out. At least 3 times larger will be there, minimum. Because 5 minutes to 15 minutes is 3 times. 3 times 5 minutes is 15 minutes. That means the 15 minutes leg out should be at least 3 times the leg out of the 5 minutes. That means you get a very good profit. So where you are participating? In the 15 minutes leg out participation, you are participated in the trade. How you participated? Because you identified this 15-minute zone is responsible for the violation of this entire 15-minute zone, and also it is responsible for the trend change from downtrend to trend change to sideways. Next time in the retracement, it will pick up the orders and a higher time frame zone will be created. That is what you learned in lesson 22. Lower time frame zone as an origin to the higher time frame. You know that a higher time frame zone is getting created. Generally in such kind of situation, that is what happened. Because order flow is very strong, that's why the trend is changed from downtrend to sideways. So it picked up the orders. When the price retraces, sometimes it won't retrace. Price might be flying from here. And talking about the scenario when there is a retracement. Immediately before higher time frame creation, the retracement should take place. Before higher time frame zone creation, the retracement should take place. After that, higher time frame zone will be created. The higher time frame zone creation, entire thing is your profit. See what happened here? It gave you an entry. And this entire thing is going to be your profit now. Okay, sometimes because during the higher time frame zone creation, fight will be there between institutions. After that, more and more order flows they added. So this entire thing, see 15 minutes, the entire leg out is our profit. So you have a 15 minutes zone target because this is a high liquidity zone. The newly created zone is a high liquidity zone. So probably it will be. But remember, this is a 5 minutes level, high liquidity. Always remember, this is the 5 minutes level high liquidity. But you have 15 minutes high liquidity will be created. That I will show you later. But already you have a rally based drop is there. So you can mark like this. This is going to be your 15 minute supply zone. This is the 15 minute supply zone. And this will act as a target. Now let me go to 5 minutes. See how much profit you got. Here you got the trade. This entire thing is 15 minutes leg out. You participated in the 15 minutes leg out. How you participated? Based on the concept of zone violation and changed the trend. This 5 minute zone is responsible for the changing the trend at the 5 minutes level. Of course, there is a 15 minute zone ladder created that we will see later. First, already you got the profit. You took a trade and here it reached the target. So what is your, how much profit you got? Let us see, because you have to understand these concepts. Only with profits only you will understand the power of these concepts. That's why observe the profits. Such a powerful concepts you should not miss. Okay, what is this? Target is a low of this candle. Generally, few points before you exit, but anyway, it reached this target exactly. I am calculating. So the closing of this candle. What is the closing of this candle? 468 rupees. Taking the calculator. So 468 minus, what is the entry? Entry is in the 5 minutes time frame. The open of this candle is the entry. 463.75. 463.75. That means for one stock you got 4 rupee, 25 rupees for 25 paisa as a profit. From this zone to this zone. Definitely you will be having a very good RR. So let us, in case if you have a doubt, let me draw that also. You have a long position. So this is going to be your RR. Close to this. This is going to be your entry. Let me say this is your entry approximately, and approximately I am keeping some stop buffer also. So what is the RR you got? Some mistake. 0.35 is RR, mistake. Something is wrong. Is it long position? Did I select? Let me check once again. Long position. Say somewhere here is your entry. I mean, this is the target, and entry will be approximately here. And let me add some stop buffer approximately. So let us assume this is the stop buffer. Still you get a trade here. 1:3 RR you got. Maybe I would have added more stop buffer, but still okay. We got 1:3 approximately. So 4.2 each share. If you look in futures point of view, let us see. Margin, zero the margin calculator I am taking. This is zero the margin calculator. If everybody wants to access, remember this URL. You can read this URL. I can type and you will get into this zero the margin calculator. We know what is the lot size and what is the cost of the lot, approximate value, at least you can see. So what is this stock? VEDL. So here if you scroll down in the symbol, you type VEDL. Which month? Current month we will select future, 26 September expiry. So you have 2300 stocks are available. So into 2300. You would have got 9,775 rupees profit. See what happened? Your trade is, your bearish trade setup is stopped out. Even after stopped out, still you got, while stop out, maybe you got a minimal loss, maybe some 700 or 800 rupees, depending on the risk. But see the profit, you got 9,775. Still you would have got maybe close to 9,000 rupees or maybe 8,700 or 800 rupees profit you would have got if you deduct that loss. So what is the cost of one future for VEDL? It's around 2,50,000 because prices are moved. So by the time prices reached here, definitely value will be a little less. Currently 2050, 816 it is showing. Let me add 2050, 500 rupees. I mean 2,50,500 rupees. So into 100 divided by ROI I am calculating. Divided by 2,50,500 rupees could have been your future margin approximately. I'm doing approximate. Maybe you may see some 100 or 200 rupees higher value or lower value. That doesn't make any difference for our calculations. So you would have got 3.9% ROI you would have got. See, you are supposed to get a loss in this particular stock, but ultimately it turned into profit. See, the loss could be this 5-minute zone with small risk. But see how much profit you got from this demand zone till here. And when you participated during 15 minutes leg out formation, see, now let me go to the 15 minutes time frame. See, in this leg out you participated, your trade. This leg out creation took place from this 5-minute zone. Why we gave so much importance to this 5-minute zone? Because this 5-minute zone is responsible for the entire violation of this zone. Why we are depending on, actually we are supposed to depend on 15-minute zone for the violation of this 15 minutes supply zone. But why we are depending on this 5-minute zone? Because there is no 15-minute zone, we are depending on this. Now what happened now? Trend is also changed. Here you have a drop base, drop is there. This drop base, drop is also violated. Probably trend might have changed to uptrend. But actually your trend is sideways. The reason is This 15-minute zone and this 15-minute zone both are LOTL zones, level on the top of the level. Because both are overlapped, if both the zones are violated, then trend will be changed to sideways. So this is also drop-based drop is also violated. So now completely the trend is changed to sideways now. Already here itself it is pierced in this candle. See here, this candle itself, the zone is pierced. After that we picked up, this is the lagging candle, a 5-minute zone. After that 5 minutes, sorry, this is the lagging candle of 15, I'm sorry. It violated this entire LOTL zones, trend is changed to sideways and then came to this 15-minute zone, picked up the orders and the entire 15-minute zone is created. Now 15-minute zone gets the importance. See here, you have a drop, base, rally. This 15-minute zone. Now next time price retraces, you can plan a trade. So here we are, type 2 proximal entry we are planning. See now, prices after leg out, again prices came down, reached this newly created 15-minute zone. Definitely this newly created 15-minute zone will be having, a fine-tuned 5-minute zone. Now I am deleting this zone for better explanation. See here, lower time frame zone is the origin for the creation of higher time frame zone. So here this newly created 15-minute zone you may find here inside, within this area. See, this entire candle is the ERC candle, big candle, very big candle. This is the lagging. You have 1, 2, 3, 4, 5 base candles. So you can draw the zone like this. This is the 15-minute zone. Sorry, 5-minute zone. This 5-minute zone is overlapped with 15. Here you have a ERC candle as a lagging. You have 1, 2, 3, 4, 5 base candles. If not, you can also draw like this. You can consider this as a ERC candle as a lagging. You have a base candle. Actually, this is not having 75% body and also it is not having less than 50% body. It is between 50% to 75. So depending on the situation, you can consider this either a leg candle or a base candle. Either way you can use. So this is the best situation because there is a leg out is there. Excellent leg out. There is a gap is there. Gap up. A small gap up. So that's why until the gap you can fill the zone. Because when gap is there, pro gap is there, prices may not penetrate until the gap is closed. So we have a leg in, you have a base candle, you have a rally. This is going to be your entry. This is going to be your stop loss. And finally prices reached the target. Because this is the 5-minute zone. You are taking trade at the 5-minute zone. When you are taking a 1235 candle and you have a new supply zone is created, rally based drop, 5-minute supply zone. Until here you plan your trade. So what is the RR you are getting? Go to the long position. One is to 3.48. You can also further adjust the risk also somewhat up to here. Why? Because this entire order flow is starting from here. That way also you can plan. Or you can exit or take a new entry from here. Either way. Because this is the intersection area, order flow will be there. Lot of order flow. That way You can plan a trade like this, or you can plan like this. It's all depending on your risk management. You can adjust. Even if you increase the risk, you are getting 1:3.29 RR you are getting. So it's a value. RR is supporting, and order flow is very strong in this area because it is a newly created zone, and first time prices entered. See, because how powerful. See the rejection. After that, see the price movement from here to here. Came down and again pushed up and reached the target. And how much profit we would have got? Let us calculate. Here, the open of this candle is the entry. That is 468.10. Sorry, that is the target. This is the target, 468.10. And your entry is, this is the candle. Because we filled with the pro gap area. So that is the reason why the open of this candle. Because gap is filled. Because pro gap is very small, we just filled. If it is a big gap, your risk may not be supporting. Because it is a very, very small, we filled the gap. That's why we got the exact entry. These are the tricks you have to do when you are planning, when you are trading. Big gaps, you can't do anything. Small gaps, fill the gap and take the entry. That way you will get successful trades. Okay, and till this gap close, this is the open of this candle. The open of this candle is 460, 465. That is our entry. 460, 465 is our entry. 464.65. What is the low of this candle? Low of this candle is 460, 465 exactly. Maybe you might have added small buffer, but okay, exact entry we got. So 3 rupee 45 paisa. How much profit you would have got? 2,300. You got 7,935. Earlier you got around 9,000 rupees profit. Now 7,935 is your profit. Because earlier profit is 9,775. Now current profit is 7,935. See, both these trades together, how much profit you would have got? What is the RR? Into 100 divided by 2,50,500 approximately. You got 3.1 ROI or 3.2 approximately, rounded value. ROI you would have got. Or 3.1. See, earlier you got some 3.3 or 3.4 you got ROI, right? Earlier 3.4 you got the ROI. Now you got 3.2 you got. So total both together you got 6.5 or 6.6 ROI you achieved. So 6.5%. Both trades together. Because after closing the first trade only you got the second trade, right? First trade you closed, the second trade you got. This is the first trade you would have got in this zone. Probably at 10 o'clock 15 minutes you got. After that you closed your trade in this candle 11 o'clock. Next trade you got at 12:35 you got. And you closed the trade at 2 o'clock 20. Afternoon 2 o'clock 20 minutes you closed the trade. And this 15-minute zone, you can call it as a trend change horizon. Even this 5-minute zone is also, you can call it as a trend change horizon. Why trend change horizon? A new zone is created. I'm stressing on the word new zone is created. A new 5-minute zone, new 15-minute zone. That means, can we use old zones also? Old zones means existing zones. That I will explain later. Because I want to raise this doubt in our mind, that's why I'm stressing on this point. A new zone is created. The newly created zone changed the trend. And the newly created zone is responsible for trend change. And this is the origin for the trend change. At 5 minutes level, this is the origin for the trend change. At 15 minutes level, that's why we are calling them as a trend change origin high liquidity zone. Order flow in those zones are very strong. And luckily what happened here? The 15-minute zone picked up the orders from the 5-minute zone. That's why this 5-minute zone probably a super strong zone in the coming days. that is lower time frame zone as an horizon to the higher time frame zone, and also responsible for the trend change. Both happen here. See, generally lower time frame zone as an horizon to the higher time frame, we don't bother whether trends are changed or not. We only see this zone is responsible for the creation of higher time frame zone. That's why we call this lower time frame zone having strong order flow. But today what happened? This lower time frame zone is not only responsible for the creation of the higher time frame zone, but it is also responsible for the trend changes at the intermediate time frame. Zone is lower time frame zone only, but the trend is changed at the intermediate time frame. And also this 15-minute zone is also created both together, because the order flow in this area all together did this activity. That's why this 15-minute zone or 5-minute zone, you can call them as a trend change horizon. And those zones will be having a strong order flow, and immediately after the zone creation, continuation to that, if these zones gets the retracement, you get a very good trade opportunities. Suppose a new zones are created. See here, rally base rally, one more zone is created. After that again they came to the they retrace it to this zone. At the time this zone may not be having much power, but still why this zone is having power is it is a 15-minute zone. See here, after 15-minute zone there is no 15-minute zone. Let us assume rally base rally, one more 15 is created. After that the prices came down, the 15-minute zone has to be violated, and after that it came down, it get into the high liquidity zone. At the time the power may not be much stronger than what we expected earlier. That's why I kept these zones under the low priority categories. This is the reason why I kept them in the low priority categories. If suppose without a new zone creation, directly the from 15 minutes zone directly came, see today that is what happened. Then they act as a high priority, high liquidity zone. They are like high priority zones. So that's why whenever the low priority zones prices are retracing, please check before getting into the zone. Any new zones are, see here we have a rally base rally and then prices came. This is one possibility. Another possibility, sorry, not rally base rally, drop. This is the drop base rally, prices came. Let us assume after that rally base rally is created. One more rally. After that prices retraced back. The first rally base rally is violated, and then prices came to this zone. This high liquidity zone power will reduce. Because there is a chances that, I am not saying they will reduce, there are higher chances, power will reduce. Because there are higher chances, power will reduce. That's why I kept this category under the low priority, high liquidity zones category. See, without a rally base rally and new zone creation, prices directly came. Now they act like a high priority, high liquidity zone. See here today, the prices came and how it gave a very good trade opportunity. The fine-tuned 5-minute zone area gave a very good trade opportunity. 2 successful trades we got today. One is from the 5-minute zone and another one is from the actual 15-minute zone. So this is how you should understand a trend change horizon. Same concept you can apply to demand zones also. Demand zone violation, supply zones will be created. So that supply zone creation will change the trend. And that newly created supply zone is responsible for the trend change. That way you can call it as a trend change horizon high liquidity zone. Our software is identifying all these zones. So that is the reason why sometimes why we want high liquidity zones. I'm sorry for my mistake. Sometimes we want bullish and bearish trade setups along with ITF Zone Confluence. We want them two reasons. First of all, the zones, which one? The LTF zone having confluence with ITF zone is a high probability setup. They have higher chances success rate. Today you have seen good number of zones or we got the trades. Second possibility, there is a possibility that the zone will be violated and trend will be changed. If that is the case, we have this trend change origin concept might exist, and that will give us a trade opportunities, new trade opportunities. Even though the zone is violated, still we got the trade opportunity. Today in this stock we got two trade opportunities. Every time you may not get multiple trade opportunities. It is a lucky day today. That's why we got multiple trade opportunities. Excuse me. Multiple trade opportunities. Even our order is stopped out, still we found the trades. Many people, what they do, order is stopped out, they will be leaving. Because some pain will be there. Today order is stopped out, I missed the trade opportunity. But see what happened? Even though it is stopped out, the 5 minutes trade is stopped out earlier because we have deleted those supply zones. Still this 5 minute zone gave an opportunity. We participated in the 15 minutes leg out, and once again the new 15 minute zone prices came. Once again we participated in the trade, and it gave you two trade opportunities. One is with 9,000 rupees profit, one future margin cost, and another one is with 7,000 plus rupees, another trade you got. Your investment is 2.5 lakhs. But you would have got around 17,000 rupees profit you might have made from both these trades. Both together you would have achieved 6.5% ROA you would have achieved. With the same capital, you took both the trades. Okay, this is about trend change origin. Next, let us focus on the another concept, trend change zone, TCZ. TCZ means trend change zone, TCZ. Trend change zone. How TCZ is different from trend change origin? See, both the concepts are almost similar. One small difference. Here a new zones are created and changed the trend in trend change origin. But in trend change zone, a new zone won't be created, existing zone. Probably the existing zone is having a very strong order flow. And that existing zone will change the trend. Next time in the retracement to that existing zone, we can take a new trade and we get a successful trade. Generally, intraday, in HIT trade setup, so we get on the same day we get trade opportunities. If you are going for DIT trades or WIT trades, you need to wait for a few days or few weeks time for the retracement. That's why for me it is easy for me to explain these concepts based on DIT trades, because everything happened today. So that's why it is easy for me to explain this concept. At the same time, it is easy for you to learn these concepts. So which stock it happened? The one, Tata Communication. Tata Communication only violated, right? Yes. See, here we have a Tata Communication. We have a high liquidity, not high liquidity, bearish trade setup. This is a bearish trade setup for hourly income trade, and this 5 minute zone is in confluence with 15 minute zone. See, here we have this zone. What is this zone? Is having 4-9, that means 4th September 15.5, after that 3 base candles. So this is considered as a drop candle, leg in, then 1, 2, 3 base candles and drop candle. Drop, base, drop. So that's why we have drawn this zone, this 5 minute zone. This zone was created yesterday during the last candle. This is the leg out. See, today what happened? With a gap up, Prices opened here and then came down. That means our 5-minute zone is violated and also the 15-minute zone is also violated. Let me go to the 15 minutes time frame. In the 15 minutes time frame, we have a drop, we have 1, 2, 3 base candles. This is a medium size leg candle, is also part of the base and then drop candle. And this zone is identified by our software. This 15-minute zone also identified because I have drawn according to the zone identified by the software. Drop 4 base, 3 base candles, medium size leg candle is also part of the base. So we are considering 4 base candles part of the zone. And then a drop candle. So this is a high explosive leg out candle. And all these 4 candles, all this entire 15 minutes supply zone, we have a 5-minute supply zone. Both are overlapped with each other. That's why this stock is identified. See the supply zone confluence, 15 minutes and 5 minutes. And today what happened with a gap up, this zone is violated. 5 minutes it will be much clear. See here, with a gap up, the zone is violated and then prices were started coming down. That is a different story. But entire 15-minute zone is violated. And this is a bearish trade setup identified by software. If this 15-minute zone is violated, what will happen? The 15 minutes trend will be changed. Because it is a bearish trade setup, that means trend is downtrend, 15 minutes trend. That is what our report also showing here. See, in ITF, all the trends are downtrend. In Tata Communication also, the ITF trend, that is a 15 minutes trend is downtrend. Now because the 15-minute zone is also violated, the 15 minutes trend is changed to sideways. Once sideways is changed, now immediately we should focus on who is responsible for the creation of this trend change we need to identify. Already here we have a 5-minute zone is available. Look at that, our report itself is telling. There is a 5 minutes demand zone. See here, the Tata Communication is having a 5 minutes demand zone and moreover, it is a high liquidity demand zone, already tested 8 times and 8 rejections are there from this zone. It's a high liquidity. That means still institutions are keeping a strong order flow in this zone. That means they keep on adding new orders into this zone. That's why multiple times it tested this zone. I didn't draw wick to wick, I have drawn type 2. Otherwise, this is a test, this is a test, this is a test, this is a test, this is another test, this is another test. This is yesterday tested. Prices came, closed, and institutions might have added a new order flow in the existing zone. They didn't create a new zone. See, today what happened? With a gap up, it pushed with a gap up. And after that, the prices came down. Why prices came down? Because institutions know they added so much of order flow in this area. They want to let their orders to execute. Because the existing bearish trade setup, the entire order flow is consumed. There is no more supply. Next time they push into this zone and they want their order flow should be executed. And with this order flow, they want to push the market up. Did they create a new zone for violation of this zone? No. They used the existing zone. The concept is same. The only difference is previously in trend change horizon, institutions created a new zone and they changed the trend. But in this example, institutions used the existing zone and then they changed the trend. Who is responsible for this trend change? This existing 5-minute zone is the responsible. Because this existing 5-minute zone is the responsible, so it is acting as, if they may create a new zone also here, that possibility is also there. But did they create any new 15-minute zone here? No. Here they created rally, base, 2 base, rally. Next time when the prices are retraces, probably it may work, but it may not be having that much power because they again created rally, 3 base candles, rally. Again they created rally, 3 base candles, rally. But here powerful is, this is the zone. This zone is powerful. And is it having any confluence with 15-minute zone? Yes. Rally, base, rally. This is the 15 minutes zone having confluence. Look into the 5 minutes. This is also a 5-minute zone. Drop 1, 2, 3, 4, 5 rally candle. That means same 5-minute zone is also acting as a 15-minute zone. See, this is the 5-minute zone. If you go to 15-minute zone, you will see only one base candle. Drop base rally. So this 15-minute zone has become trend change horizon, because the 15-minute zone is responsible for the violation of this entire 15-minute supply zone, and also this 15-minute zone changed the existing trend from downtrend to sideways. I repeat again, this 15-minute zone not only violated, this is the existing 15-minute zone. This is a high liquidity 15-minute zone. Of course, this is also high liquidity 5-minute zone also. The same zone is acting as a high liquidity 15-minute zone, and also it is acting as a high liquidity 5-minute zone. And this zone is responsible for the violation of this supply zone, 15-minute supply zone. If it is just violated the supply zone, it gets only zone achievement. But it is not only violated the opposing zone, but also changed the downtrend to sideways. That means now the bearish trade setup is no more valid, because the trend is changed. And this trend is changed by existing zone or a newly created zone? Not newly created zone, existing zone. That's why I have given a name trend change zone. Earlier I have given the name trend change origin, a new origin is created. But here, a trend change zone I have given the name. That means trend change zone means existing zone. That meaning you need to, that meaning you should apply. Trend change zone means existing zone which is responsible for the trend change. So that's why in the name I have given the trend change origin, trend change zone. That means these zones are changed the trend at some point of time in the past or maybe present. Okay, today's live market we can assume as a present. But maybe tomorrow or day after tomorrow, now we can consider it as a past. So maybe present or past, they changed the trend. That's why the name is having trend change. Because there are two types, a new zone creation, changing the trend, or existing zone creation, changing the trend. That's why to differentiate that, I have given the name trend change origin and trend change zone. And another advantage, what happened? The existing zone which is changed the trend is already a high liquidity zone. That's why even it is super powerful. Already high liquidity zones, high priority high liquidity zones are powerful. Trend change zone and trend change origin are low priority high liquidity zone. Maybe within the same day they act like high liquidity. Because institutions added a new liquidity today. And already this zone is having high liquidity. Because this zone is a S_DZ, support demand zone. The demand zone. See, today what happened? The zone is violated. A morning 9:15 candle. Let me show you in 5 minutes time frame. This is the 5 minutes candle. It happened. And after that institutions pushed into this zone and we got an entry. And finally it reached up to this 15-minute zone. Till this 15-minute zone, prices were moved. And moreover, trend is changed to uptrend already. Why? Because there is one more rally based drop that is also violated. Generally what we do, we exit here. Rally based drop, this is the target, 15 minutes target, we will exit. But what I told you earlier in the beginning, when I am explaining this concept, many traders, they take the trade and they hold until the trend changes. Maybe some people would have exited here. Rally base rally, this is violated, probably here they will exit. If this is not violated, they may further continue. Because it is intraday, it is an intraday trade, some trade-off should be there, somewhere here. Because the same day it won't fly, some profit booking will take place. Probably this could be one ideal scenario, rally based drop has to be exited. Why? There is a reason, not up to here. See here, there is a strong rejections. Actually, you need to exit in the horizontal line. I am going to draw. Here we should exit. The reason? Previously I explained once while taking the entry. The swing changes. See here a little above, because a lot of order flow might be there up to here. There is a rejection. Next time it went up to. Next time a little above, it will go and again come down. This is having a very strong, powerful. So probably in this blue color or a little above the blue color, you need to exit and book the profit. Because all these rejections, clear indications, there is a strong order flow. We are doing DIT trades. We are not taking these trades for the delivery. We are doing sorry for my mistake. We are doing HIT trades, hourly income trade. Intraday trades we are doing. You can't take these trades for the delivery. That means you are not going to carry forward for the next days. If that is the case, you need to observe such kind of price actions. Here you need to exit. Until then you've been seeing there is no violation of these zones. Somewhere in the blue color line you would have exited, near to that, little above or little below. It's up to you. So let us see how much profit we would have got because of this. So this is the target, the blue color line what we have drawn. Because until this place there are no zones are violated. And this is an indication that during the intraday, definitely we get a lot of resistance. There is a supply zone, a strong resistance we will face. The reason is there are earlier price actions. Another thing is there is a very good move from here to here. People also will look for profit booking. That is also there. All these points. And also it is nearing to the end of closing hours. Probably at 2 o'clock, 30 minutes or 45 minutes, all your trades will be closed. So you want to book your profits. All these factors you need to consider. There is no meaning looking for again further trailing stop. There should be some trade-off at some level. If you would have used a trailing stop, maybe here rally, base, rally, here you would have exited. Now see, we are exiting here. The reason, because of these price action close, rejections. In this area, at the supply zone, probably institutions kept a very strong order flow. The rejection, there is another rejection, sharp rejection. See, today also see what happened. Prices went a little above to the previous high and again a strong rejection going down. If you look into a 25 minutes time frame, you will see a rejection here. Or 75 minutes do we have? Yeah, it's came down. So that's why this is the target. 1986.60 is the target. What is the entry in 5 minute zone? Your existing 5 minute zone. Let us see what is the entry. The open of this candle. That is the high of this zone. The open of this candle is 1946.95. Okay, generally you will add some entry buffers and all. I am just calculating. Again, don't ask me where is the entry buffer, where is the stop loss. I am roughly calculating. This is the point you have to understand. But when you do the real trading, you will keep entry buffer, you will keep stop buffer, you will look into the RR. But why I didn't look at RR is because here the strategy is different, because during the trend change our goal is to grab as much as possible. That is our goal. So see, you got 39.65. See, because of these trend changes, they always gives you huge profits. That is what I am telling you. Why people will trade only such kind of trades is because of this. Sometimes they will carry the positions also. Because this is hourly income trade, I am closing the positions. But people will carry the positions further also. That way they grab the maximum profit. So this is a Tata Communication. In the margin calculator, Tata Communication, the current month expiry 26th September. So total size is 500. So 39.65 into 500. You got 19,825 rupees profit. What is the margin cost? 1,87,476. This is the current closing position. But you took a trade in this zone. Definitely another 1,000 rupees or 1,500 rupees difference will be there in the margin. Okay, still what I am doing, I am just reducing only, this is a 456 only. Anyway, it doesn't make much difference. So into 100 divided by, maybe your future could have been 1,86,000 or 1,86,000, some 200, 300 will be there. But I am adding 1,87,000. Still you get lot of ROI you will get. Even if you add extra, still you get lot of ROI. So that's why I am reducing only 400, 1,87,000. You got 10.6% ROI you got during the intraday. And who is the reason for giving you such a huge profit? Your trend change horizon or your trend change zone. See how powerful these concepts are. Why this concept is worked? Because this zone is responsible for the violation of this entire 15-minute zone and also changed. This is the 15-minute zone and also 5-minute zone. Both are exactly the same, 15. That means 5 minutes is overlapped with 15. So this 15-minute zone is responsible for the violation of this 15-minute supply zone. If it is just a violation responsible, it will get only zone achievement. But this zone is also responsible for the trend change as per the Dow theory. Dow theory says when trend is changed from downtrend to the sideways or sideways to the uptrend, that is the area if you can able to enter, you get huge profits until the end when there is a bend. This is what the meaning of trend is our friend until the end. But where you are entering, at the beginning we are entering. And how long you are holding? Until the end we are holding. For example, if you would not have kept this blue color line based on the price rejections, you blindly just exiting when these 15-minute zones are violated. Here rally, base rally, here you would have exited. So from here to here you captured the move. Because intraday we took some decisions and exited early. But sometimes what will happen? Again further it will go up. This zone also will violate and further it will go up. Generally you see in daily income trade and weekly income trade, so you will see such kind of scenarios. Your trades will be continuing for next a few days or few weeks. And finally, when it turns on that day, people will exit from the trade and book the profit. That way they get a huge profits. That's why detecting the early trend changes are very, very important. Now you learn the concept of the zone that is responsible for the changing the trend. Probably they will giving you higher opportunities. Let us assume if it created a new supply zone. If it created a new supply zone, entered into this is not, because this is a drop candle, again another drop candle, another drop candle. There are no base candles. All these are all big candles. This is a medium size candle. This is a large candle. This is in between medium and large. No 15. Suppose if a new 15-minute supply zone is created and then came down, then this is not a very powerful zone. Maybe or may not be, we don't know. The priority will go down. From high priority, it will come down to low priority. That is the reason why I kept them in low priority category. You have to understand why I kept them. The day when they created and immediately without any new zone creations or without any opposing zone creations, they directly entered into your responsible zones, then they act as a high priority, high liquidity zones. If a new demand zones are created and they are violated and then came back, or a new supply zone is created and pushed the zone into our newly created the TCO or or existing TCZ zones, at the time you can't expect them as a high priority. They will act as a low priority zones. They may work, they may not work. That's why reduced the priority. But today, see what happened? All the conditions are in our favor. While prices are coming down, it did not create any 15-minute supply zone. 5-minute zone it may create. No issues. 15, because the trend is on the 15 minutes time frame. The trend is important. 15 minutes no supply zone is created. That's why this 15 minutes demand zone works effectively. And moreover, this 15 minutes demand zone is also acting as a 5 minutes demand zone and high liquidity demand zone. It is a high liquidity. So this is about the TCZ and TCO, trend change horizon and a trend change zone. Hope you got clarity with these concepts. But if you properly concentrate on these concepts, you get a huge profits in the coming days. So that's why in our NeoStock reports, the reason why I am providing these this setup. Which setup? The zones. In each trade setup, I am generating bullish and bearish trade setup, and also I am adding this ITF and LTF combination. Because this is a hourly trade setup, you are seeing 5 minutes and 15 minutes. That's why I told you guys, look into the most recently available NeoStock report and look into the search strategy for all the 4 trade setups. If you look into all the 4 trade setups, earlier I didn't provide these old reports. I didn't provide this option to you guys. I just provided only bullish and bearish trade setup. The zone confluence combination I did not provide. The reason is only in lesson 24 only you learned about zone confluence combination with bullish and bearish trade setups. Lesson 24 only you learned. And by the time by the time I release these videos, now I changed these videos to premium subscribers only. But anyway, I am releasing the videos after 1 week or 10 days or 15 days. So still you get the opportunity, and recently only we released all the recent videos. So in the recent videos, you can find all these things. The reason why I am releasing in the videos is, the main reason is you will keep an eye on these stocks. 2 reasons you will keep an eye on these stocks. One is to get bullish or bearish trade setup trades. That is one reason. Second reason is, in this combination, if any of these zones are violated, and immediately you want to look for trade opportunities based on the TCO and TCZ trade setups. With that setups, you want to grab even better profits. During the same intraday, if you get the trade opportunity, you get intraday, very good trade opportunity, profitability you will get. If it is a DIT, next few days you will get without creation of new zones. See, always remember, the price should enter into that responsible, I repeat again, price should enter into the responsible TCO or TCZ zone without creation of any new zones. then they act as a high priority, high liquidity zones. The new supply zones or new demand zones are created, and then they are entering into the TCO zones. They will work, they will give good trades, opportunities, but their priority is low. You cannot treat them as a high priority, high liquidity zones. So these points you should remember. So this is about lesson number 25. Hope this information will be useful to you. It's a very big lesson, but it's an important lesson for making so much of huge money. That is the point you have to understand. All these days you are not aware of these concepts. Now you are understanding, and our software also generates these zones. Because in the software, sorry, I think software, I closed the software background. Again, it takes 10 minutes to run the software. Let me show you in today's high liquidity, in today's report generation video, I will explain, but may not be available to everybody. But after some time, that video might be, remember today's date. After some time, in today's date, whichever the date, today's date is 5th, 5/9/2024. On this day, whichever report video is there, that I will show you how NeoStock is helping in identifying such kind of zones, newly created zones, without any newly created demand or supply zones. It can list. That facility is there. At the top of the strategy builder, the first row of the strategy builder, these options are available. I never explained those concepts so far for you people because you didn't learn any of these concepts. Anyway, next session I'm yet to plan. So once we plan again, we will start the next session. Meanwhile, you have to spend a lot of time in practicing these concepts. Any of the doubts you have, please put them in the comment section. Whenever I find time, I will try to address your comments. But concentrate a lot. All of you, please look into once again I'm telling you, please look into the most recently released NeoStock software report. And look in all the income trades, look for the LTF and ITF Zone Confluence. For bullish and bearish trade setups, LTF and ITF Zone Confluence related zones you see. That way you can find the violated zones, and after that any TCZ zones or TCO zones are available, and how they are, if prices are retraced immediately without any new zone creations, if they retrace it to those zones, how much profits they have given, keep on observing them. See, ultimate goal is to make more money. See, the first goal is making money. The second goal is making more money. You have to remember both these points. Now I am teaching these concepts for making more money. Making money, already you learned. Existing, your core concepts are available. The core bullish and bearish trade setups. Now bullish and bearish trade setups along with ITF Zone Confluence and their violation. And once they are violated, the zones which is responsible for the violation and responsible for the trend changes, both together. Identifying them, immediately getting trades in that zones. Then how much more money they are giving. You have seen today in both the zones. Two zones were responsible today and both zones gave very good profit. One zone is violated, but already earlier it is pierced. So today the 5-minute zone violation, no impact on that zone. You have seen in that zone. There is no impact. So that's why understanding the concepts in the proper way is very, very important. Please practice a lot. You will get grip on this concept. Once you get the grip, our NeoStock reports every day, the LTF and ITF Zone Confluence for different income trades you are going to get. Whichever the day any of the zones are violated, immediately you can keep an eye on those stocks by looking for the zone that is responsible for violation of the zone and trend changes. So this is about lesson 25. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.